We stopped last time at slide number 12, where we discussed the duties and responsibilities of the mutawalli, or of the nazir of the waqf. And we discussed the role of the nazir and the role of the qadi, who's the Muslim judge. Now we'll continue. We'll give some historical perspective of the regulation rules that were adopted, and the laws concerning the waqf in the different countries. Now, throughout Islamic history, governments considered awqaf as a national resource, and governments have always tried to bring awqaf under the government control. Such actions have caused a great deal of controversy, and sometimes there was political heat as a result of government action. Now, the first attempt by the government to take control of awqaf took place in Egypt during the period of the Mamluk rulers, which they ruled from 1250 to 1517. This action was strongly opposed by Muslim scholars, that it was quickly withdrawn. The change actually came with the Ottomans in the early 19th century, say from 1281 to 1918, who in the early 19th century, they established a special ministry to oversee awqaf affairs, and they enacted laws for the awqaf sector. Now, the most important of these laws was the Waqf Law of 1863, which regulated the registration, the control, and management of waqf properties. This this law came as, some sweeping reform to the prevailing chaos and rogue behavior of some nazirs in the management of awqaf. So this law really was to control the mutawallis of awqaf. Now, during the first half of the 12th century, many governments, many Muslim countries, they issued laws that in essence were based on the Ottoman laws till now. By the second half of the century, most Arab and Muslim countries had gained their independence and enacted new laws, but put awqaf under government control. They established directories under the directorates, actually, or ministries under the government to manage awqaf as a public sector instrumentality. However, the degree of control varied from one country to another. Now, in Egypt, awqaf land for 1/4 of the, accounted for 1/4 of the agricultural area of the country when Muslim, when Muhammad Ali Pasha, who was the the viceroy or the Khadif of Egypt, he brought them under state control. The state control of Awqaf really under Nasser. When Nasser came in 1952, he nationalized Awqaf agricultural assets as part of government policy of land, what we called land reform. And large areas of Awqaf were also nationalized in Algeria, in Syria, in Tunisia, in Turkey, and in many other Muslim countries. The nationalization of Awqaf land and the transfer of responsibility from private mutawallis to government agencies meant the demise of the independent identity of the Waqf institution, and it really endorsed the Waqf as part of the government sector. Now, the government control of Awqaf has led to significant decline of the sector to the point where Awqaf role as a welfare mechanism was reduced to the point that it became really a burden rather than support of the government, the government expenditure, the government purse. Recent years, many Muslim governments embarked on reforming the administration of Awqaf by separating the custody function from Awqaf asset management by establishing separate entities to develop and manage Awqaf. So the ministries of Awqaf, who had the control, they established special departments or special agencies to develop Awqaf. So in the first one was in Egypt. In 1971, they established the Egyptian authority, the Egyptian Awqaf Authority, to take over the management of the Awqaf properties from the Ministry of Awqaf. So the ministry was responsible only for the custody of Awqaf, but the development was delegated to this Egyptian Awqaf Authority. In Sudan also there was the Federal Corporation of Awqaf. It was established in 1987. Kuwait in 1993, they also founded Awqaf Public Foundation, which is still in existence till now. In Jordan, they established the Awqaf Property Investment Corporation. In Malaysia, at the federal level, the Prime Minister Department in March 2004 established the Department for Awqaf, Zakat and Hajj, they call it Jawhar, to coordinate the activities of the state's religious councils in matters relating to Awqaf development. The latest is the establishment of Awqaf Qatar Awqaf Authority, that was in 2007, to take over the activities of the former Awqaf department at the Ministry of Awqaf and Ministry of Awqaf and Islamic Affairs. In Iran also, the Waqf and Charity Organization was established in 1984 as the official body under the Ministry of Culture and Islamic Guidance to oversee, to promote, to manage, and carry out activities and projects that are founded as Awqaf. The investment and operating arm of this Waqf and Charity Organization is now Iran's endowment fund, whose objectives are to develop, revive, and expand, and to reconstruct and rehabilitate Awqaf properties and provide social assistance as directed by the Waqf and charity organization. Now, in non-Muslim countries, where there are Awqaf for Muslim minorities, the Muslim communities, they administer their Awqaf properties in accordance with the trust law and the foundation law of the country. Many of these laws were actually inspired from the Islamic Waqf system. Many communities in these countries, they established non-profit organizations that hold title to their Awqaf properties. So this is just a general run on the historical development of regulating Awqaf and the Awqaf laws that exist till now. Actually, the state control of Awqaf throughout Islamic history, the relationship between the state and the institution of Waqf has ranged from being simple and non-interventionist to being complex and authoritarian. The government has taken an incremental rather than a big bang approach to controlling the Awqaf sector. The government's gradual intervention in Waqf institutions started during the 18th century and reached its peak during the 19th century. Now, the typical institution structure for Awqaf in this diagram, you see this slide shows a typical structure of a state-controlled Awqaf. There may be some variations between countries, but the basic structure shows the connection of Awqaf to government through a fully fledged ministry of Awqaf. Or it could be a department or some agency under the government or some ministry, like the Ministry of Religious Affairs. Sometimes there is a special department that looks into the Awqaf matters that controls in Bahrain. Awqaf are vested under the Ministry of Justice and Islamic Affairs and Waqf. A Sharia board is usually comprised of some Sharia scholars and jurists who provide some oversight and advice on issues concerning Waqf properties and development. I'll talk now about the legal environment of Awqaf. Well, first of all, we all know that Awqaf is a voluntary sector. I mean, you can do it and you get thawab and ajr from Allah. And if you don't do it, it's okay. You will not be punished. It's not like zakat. Zakat is obligatory. The Waqf is voluntary. So Awqaf is mostly built on the goodwill of people who want to do something that we call it taqarrub ila Allah subhanahu wa ta'ala, for their, to reward benefits in the hereafter. Therefore, the regulatory environment should foster public confidence in the Waqf and encourage donors and promote the ethical and proactive behavior of the employees, the volunteers, and the Nazirs. And because unless there is that support, that ethical support, people will abstain from, donating, assets for Awqaf. So donors usually are generous and feel more comfortable with regulated Awqaf organizations whose operations are governed by clear, understandable, and consistent standards of accountability and transparency. Also, and this is important, financiers like banks and financing institutions, they are more willing to provide capital for project development to Awqaf organizations who adopt the best practices of corporate governance. The local laws now, contrary to what many people think, many people think Awqaf is not all that regulated, but actually the opposite is true. Awqaf is a highly regulated sector. Awqaf legal environment is comprised of a combination, first of all, of Sharia. Sharia is a law by itself, and also by government legislation. Sharia rules define a Waqf structure, purposes, management activities, mode of financing, and its ethical, social, and environmental validation. The Waqf deed defines the Waqf assets. This is another regulation. The conditions of the Waqf is another regulatory level of the Awqaf. It defines the Waqf assets, the beneficiary, the Waqf can decide that, and he can also decide on the Nazir and the succession process and other conditions of the Waqf. The Waqf also has to comply with the laws of the country, not only the Waqf laws, but the other laws of the country. Now, whether these laws are federal laws or they are state laws or even local laws or even municipal laws. So Awqaf will also have to comply with the country Waqf law, if there is one. Some countries, most countries now, in Muslim countries, there is some law to regulate Awqaf. Or if there isn't, they'll have to comply with laws which are designed for other sectors, like, if there is no law for Awqaf, but there is law for charities or NGOs, then they'll have to comply with that to some degree. Government legislations are enacted to ensure that Awqaf as a sector does not contravene the norms of the country, especially as it intersects with other sectors of the economy. There are also interest and influence groups whose views and pressure cannot be ignored. These groups, they include consultants, financiers, contractors, trade unions, licensing authorities, and of course the local community. So there is a lot of laws that regulate the sector, Sharia and government laws, municipal laws, as I said. So it's not what many people think, that Awqaf are freestanding. It's exactly the opposite. And now many Awqaf also, they fall under different jurisdictions. You see, Awqaf is a global sector. And many Awqaf organizations, they have, cross-border presence. They act as trustees and custodians of many assets and cash flows and international investments, cross-border investment. Now, in this globalized environment, a Waqf has a much broader exposure than it does domestically. The same Waqf may be subject to different laws of different countries depending upon the type and degree of connection of the Waqf to a particular jurisdiction. Well, some Awqaf, it is not unusual to find the Waqf property in one country and the beneficiary in another country, and the Waqf organization itself, the Nazir, is yet in another country. There are many Awqaf that are, let's say, made, the beneficiary is the Haramain in Saudi Arabia, in Mecca and Medina, but the Waqf is based in, maybe in Malaysia or in Turkey or in some other country. There are many Awqaf people who make Awqaf whose benefit will go to the two holy mosques. It happens. So the beneficiary is in another country, the asset is in a different country, and so it means that the Waqf is regulated by different jurisdictions depending on the connection of that Waqf to that particular country or jurisdiction. This connection, is the binding force that maintain the unity of the Muslims and the sanctity of the Waqf. So there are really, the international Waqf is a demonstration of the Muslim unity, and the Muslims are the one ummah, irrespective of where you are. This is a demonstration of that. The Waqf deed and Waqf conditions. Now, the Waqf deed is a Sharia compliant document that states the Waqf conditions regarding the consignment of the property that he donates and the distribution of its benefits or of its usufruct. The importance of the Waqf deed is that once it is signed and sealed and registered, it becomes a one-party binding and irrevocable contract. If I make a Waqf, it means I have signed, a one-party contract. There is no other party. It's me who, made the contract between myself and Allah subhanahu wa ta'ala. So it is called a one-party contract, and therefore it is irrevocable and it can be enforceable by law. Now you can put whatever conditions you like, as a donor in the Waqf deed. But in order to be officially legalized, the Waqf deed should include the following information: the name of the Waqif, the beneficiaries or the objective of the Waqf, the assets of the Waqf, the Nazir and the powers granted to him, and his succession process. The Waqf deed also serves as protection against asset confiscation, taxation, and creditors' claim, because the Waqf property, once it is registered as a Waqf, the creditors cannot take claim of it because It's not the property of the borrower. It is, the minute you make a waqf, it becomes, as many jurists and Sharia scholars say, it becomes the property of Allah subhanahu wa ta'ala. Nazirs or mutawallis are expected to comply with both the letter and spirit of the waqf deed. The question to be asked here, should the waqf focus on awqaf values or on establishing a strong compliance deed to ensure that the nazir does the right thing? The answer is that he needs both. You need a very strong waqf deed, but at the same time, you need to have some flexibility in it. So the first thing that must be considered in any waqf deed is its goals. Awqaf values and compliance need to be aligned and complementary. If the focus is only on compliance, the nazir will be restricted to do only what is allowed in the waqf deed, while an awqaf value-based deed will help the nazir to understand the thought process and goals that will guide him in instances where an unintended outcome goes against the deed's obvious intentions. It will also enable him to manage investments and that need to be bought and sold to generate additional income. Otherwise, a nazir will not be able, let's say, to exercise substitution if it becomes necessary. So there should be, some restrictions, but there should also be the flexibility in any waqf deed. Finally, we, under the legal environment, we talk about creating an enabling legal environment. The legal environment in Awqaf, what is the legal environment there? What does it include? First of all, the Sharia law and the fatwa and decisions of the qadis, the fiqh and Sharia scholars, and all the laws and administrative orders issued by all levels of government and the judicial system in the country that may affect the waqf or its stakeholders directly or indirectly. While all these factors are ultimately responsible for ensuring an enabling environment for Awqaf, the Awqaf sector itself has an important role in encouraging an environmental conducive, an environment conducive to its effective and impactful social operations. One of the major impediments for the development and growth of Awqaf is the unique and complex set of influences. What is deemed to be appropriate strategy for waqf organization will always be conditioned by concern not to violate the conditions of the waqf or the wishes of the donor and also the legal environment. Now, if we do a little bit of comparison here, unlike, the waqf, unlike commercial organization, the services of Awqaf, the services that are delivered by Awqaf may often be intangible and difficult to manage. They are difficult to measure and difficult to manage also. In commercial organizations, they have clear delineations about shareholders, what shareholders want, with all the reporting is geared towards profits and increasing shareholder values. Now, in Awqaf, the position is not so simple. Awqaf regulated mainly by Sharia, by the local laws, by the Waqf conditions. Many Awqaf organizations, they consider corporate governance and compliance issues as costly and unnecessary additional administrative burden. Now, again, unlike the commercial organization, staff in an Awqaf organization is comprised of usually low-paid professionals or mainly volunteers who have chosen to work for Awqaf for free or for less tangible rewards. A volunteer does not want reward, and this, is volunteering for some other than material reward. Their loyalty, therefore, of these volunteers is to the cause of the Waqf than to the organizational entity that hired them in the first place. So they are mainly concerned with the social aspects, and they pay, maybe most of them, little attention to the financial efficiency or even accountability. So managing volunteers is another important issue for Awqaf. The major challenge faced by Awqaf is to ensure that the huge treasure of Awqaf is preserved, developed, continues to grow, and contribute to the social and economic development. This can be met only by creating an enabling environment. The environment that should create a level playing field for Awqaf managers and causes them to be transparent and accountable, and enables them to strengthen their operations in order to fulfill their obligations to donors, to the Waqf, to the beneficiaries, and to all other stakeholders. A number of mechanisms exist to deal with these challenges, including a global code for ethical behavior, international treaties and multilateral agreements also have to be considered. However, the difficulty is that there is no global sovereignty to push along such a process. So the only solution is really to be, what we call self-regulation, self-regulated responsibility. Awqaf as a sector, really, it shows a great deal of concern for ethics based on fundamental values such as honesty, integrity, fairness, trust, and commitment. While standard regulations play an important role in protecting all stakeholders, in these areas, Awqaf organizations are better placed to regulate their own activities and can produce more social cooperation and better economic outcome than any government mandated rules. Policy implications. Awqaf is now really getting more attention from both the public sector and the private sector. Awqaf is a sector by itself, but there is a lot of interest being generated from both the government and the private sector. The Waqf has relations with all areas of the country's social and economic development. Awqaf's organization towards social services is getting more intimately connected and enmeshed with the pursuits of business interests, because Awqaf organizations are now, with their assets, they are competing commercially. There are many Awqaf has many investments, and they are interested really in maximizing profits and competing in the marketplace in order to generate more for the generate more return for their purposes. Awqaf, therefore, they are competing in a wide range of activities, such as in real estate, in healthcare, in trade, industry, agriculture. Now, with this broader business focus, it became clear that the sector is, in fact, is also an industry, and it is being subjected to increased scrutiny by governments and regulatory authorities. Awqaf, also being an act of worship, an act of piety, it provides a connection between religion and economic development. But development is a business matter as such, and it is also, a matter of faith. So developing Awqaf has to, it's a business, you have to deal with it as a business, but it's also a matter of faith. Awqaf business activities are usually undertaken to support their social mission. Awqaf investments, what they do, they merge the social mission with the market approach of business. Awqaf, albeit not for profit, and in spite of its role as a welfare mechanism, or perhaps because of its welfare role, it appears to have an edge over other sectors. The engagement of Awqaf in business, first of all, it necessitates competition with the private sector. And this means, Awqaf has to sell goods and give services, and it has to be profitable. If a dispute arises, Awqaf may have an edge over the private sector, particularly in the area where business versus charity. These are areas of concern to government to ensure that the playing field is not tilted in favor of Awqaf. The sector is regarded as relatively resilient and recession-proof. Awqaf organizations are resistant to market forces because they control donated assets. Awqaf also, they are in business, but a company has to buy its assets. Awqaf, the assets are donated, and therefore, they have free resources, they have free funds, free services. As I said, beneficiaries also provide free services. And generally, Awqaf, they have low overheads, and many of them, they enjoy tax exemptions. And therefore, they have a big edge over commercial organizations. Awqaf, they can turn a social project into a cash flow business. Yet, because of Awqaf's private and usually esoteric nature and lack of certainty about how it is governed and regulated, the sector operates in isolation from other sectors. Although there is interest, but still Awqaf seem to be, separate from both the government and, it's a sector by itself, and it enjoys a lot of, independence, contrary to the private sector. The impact of government policies on Awqaf, again, should not hinder Awqaf's investment and its capacity to grow, because Awqaf business ventures can be a powerful supplement for their social activities as they advance the community's financial sustainability by creating jobs, alleviating poverty, and by doing this, really, they are taking a big burden of the government and also of the taxpayers. So that's why the government sometimes, they do encourage them and they give them tax concessions because they ease the pressure on the government expenditure. Awqaf councils, activists, and Sharia scholars at all levels advocate government to promote policies that enable Waqf organizations to advance their mission. Sound tax policies that support Awqaf are one of the most important ways to help Awqaf to secure resources to effectively serve the society. Policies which restrict free cash flow would affect Awqaf capacity to be of service to its beneficiary and ultimately to the government. You see, because say if Awqaf is providing healthcare, okay, this is government responsibility. Awqaf is doing it. Or if they are running schools, education, again, this is, if it's not done by Awqaf, well, it still has to be done by the government. That's why, many governments, they do encourage this sector. Taxation issues. Now I'll talk about the relationship between Awqaf and the taxing authorities. Well, first of all, not all Awqaf organizations are exempt from income tax. Most governments, they grant certain tax privileges to charitable organizations because of the social services they give to society. Most governments define charitable work to include the relief of poverty, the relief of the needs of the aged people, and the relief of sickness or distress, and the advancement of religion. The advancement of education and other purposes beneficial to the community are also really the one of the major expenditures of Awqaf. However, Awqaf charitable status does not automatically exempt it from income tax. A charitable Waqf that is established and operated for charitable purposes may be tax exempt or taxed at concessional rates. Otherwise, the Waqf is taxable and is treated as any for-profit company. And again, it depends from one government to another. Each government has its own, each country has its own tax laws regarding this sector. But I'm speaking in a general context. Many Awqaf organizations are in the marketplace with direct competition of the private sector. They are in competition. They are taxable, although they may have special rules for calculating their income tax and in lodging their tax returns. The view is that a Waqf is in essence a trust doing business. The income of the trust is taxable and payable either by the trust entity or by the beneficiaries who receive the income. So if the Waqf has beneficiaries and distributed benefit to them, then if that beneficiary, may be taxed on the Waqf money that he gets. It depends, if he reaches the threshold of taxation. When a government grants tax exemption to a Waqf, it could be construed that the government is a Waqf. I mean, if the government decides to exempt a Waqf organization, you can say the government really has donated to the Waqf. It is indirectly, I would say, can be considered as a Waqf, because it is foregoing money that it can levy as tax. Governments also support the mission-oriented activities of Awqaf organization through direct grants. Not only they exempt them from tax, sometimes they do get on top of that government grants. A grant for a social service delivered by a Waqf may be less costly than if it was delivered by government, because you see, Awqaf, they first of all, they are more tax efficient, more cost efficient than any government department, and therefore it could be more effective for government to deliver the benefits through an Awqaf organization. On the other hand, when a charitable Waqf is concerned with education, healthcare, family support services, or environmental conservation, the government is in fact a beneficiary. So the government, you can consider it as a Waqf on one hand, but it's also a beneficiary on the other hand, especially in times of economic stagnation when governments reduce their expenditure in these areas. Now, some Awqaf organizations are also granted tax-deductible gift recipient status. This is another incentive that is given to people to donate. Some Waqf organizations, they qualify as tax-deductible gift recipients. This means that the donor who donates to a Waqf organization can get income tax deduction for amounts donated to these organizations. Organizations are more likely to gain the gift recipient status if not every Awqaf organization has that status, but they can gain it if their purposes and operations are in line with the government priority program or policy. For example, if the objective of a Waqf is in the direction of, let's say, an endangered species of animals, for instance, and the government wants to protect that species, and people donate for that, then they may enjoy this tax-deductible gift recipient status. The government would channel donor funds for the purpose that enable the organization to maintain that service. The Waqf organization will be required to report to the taxing authority information on the amounts of receipts and gifts that are tax deductible and how these donations are used in its tax deductible gift recipient obligation. Now, policymakers regularly review and propose changes to exemptions, operational rules, and tax incentives. Again, I must say these are general rules of taxation, and they may be differences between one country and another. In general, family waqf, we talk about family waqf. Family awqaf, they do not fall under the charitable waqf category. A waqf that is established and controlled and operated by family members for the benefit of family members would not normally be tax exempt. In many countries, the taxation rules of family trusts will apply to a family waqf. The view is that a family waqf is not a community service, and its purposes is not charitable, because it's for, and matter of fact, some of the members of the beneficiaries of a family waqf are wealthy people, and they use the waqf vehicle, a family waqf, really, as a wealth management mechanism. Therefore, the family waqf, being a family trust, does not have to pay income tax on its income that is distributed, because the one who pays the tax is the beneficiary who receives that benefit. In many countries, family trusts or waqf structures provide certain advantages, provided that income distribution is made only to registered beneficiaries who qualify under the waqf deed, and to charities which are registered as tax-deductible charity recipients. Some family waqf, they do have a share that is also for general society, for the benefit for social work. That part may be exempt, but any distribution to family members will be subject to the tax bracket of that particular beneficiary. So there is no tax benefit if the income is not distributed, if it's maintained with the organization, with the waqf, the undistributed. In that case, what happens if the family waqf organization does not distribute the benefit, then it is taxed at the highest tax rate that is available in that country. The reason is that a family waqf is not considered a legal entity, but a taxpayer. It's not, but it's a trust for the different beneficiaries. This treatment gives the Waqf Council of the family waqf a strong incentive to really fully distribute the waqf income. Listen, see, taxing undistributed or retained profits in the waqf, undistributed profits are taxed very highly, and this becomes an incentive for the family waqf really to go and distribute all the profits to the beneficiaries. Now, whether the waqf is exempt from income tax or whether it is exempt or whether it is taxable, it may have obligation for other taxes, such as VAT or GST, goods and services tax, or on goods and services produced or consumed, except where such goods and services are exempt. The the Waqf will also be subject to property and conveyancing tax, or to municipal tax, payroll tax, etc., etc. So the exemption sometimes it's clearer when it comes to income tax, but for other taxes, the Waqf still has to pay all these, VAT and GST, and on procurement of material and so on, and also will have to pay, any property or municipal tax if they have certain Awqaf buildings, for instance, and there are, let's say, taxes on these properties, they have to pay them. Cross-border Waqf organizations may be exempt in the home country and taxable in the host country, and vice versa. Some Awqaf organizations, as I said before, these cross-border Awqaf, the organization may be in one country, the beneficiary in another, and the assets are in yet another country, and so on. And that happens. There are quite a few, and I know a number of major Awqaf organizations are spread like this. So in this case, some Awqaf organizations, have this international presence. Now, the physical presence of the Waqf in a country is subject to three basic tests. As I said, the connection of the Waqf organization to that jurisdiction, whether it was established and registered in the country, or whether it is a division or a branch, whether it operates through an agent. All these things, are things to consider, or when taxes are to be levied. The physical location of the revenue, again, is another factor, and where the beneficiaries are located, or where the Waqf is pursuing its objectives, again, is another factor. Therefore, a Waqf may be tax exempt in one country, but is taxable in another, depending on the type of the connection of the Waqf to the jurisdiction and the existence of tax treaties between tax jurisdiction, because some countries, they have what they call double tax treaty. So if you are taxed in one, you are exempt from another, and so on. And actually, this is a complicated area of the Waqf management, this issue. I think I will stop at this level for this lecture, and I will continue next time to present the remaining slides, and I should be able to finalize this part next time. Thank you very much for your patience and listening.